Good afternoon. This is Todd Colvin coming to you from the floor of the CME Group. We are talking metals and gold. A big day lower after we saw the Friday finish on the highs. We kind of spent most of the day hovering a little bit off Friday's highs, kind of waiting for something to happen. The dollar had its moments. It was higher. It was flat. Equities still holding their levels at the all-time highs, and rates were just sort of blah. And then all of a sudden we got the announcement across the tape that President Trump had met with John Taylor about possible Fed chair nominee and said things went well, and whammo, we sold gold off about $12. Obviously, there's a lot of Fed expectations built into gold pricing today. It's not only a dollar trade, it's not only a geopolitical trade, it is a Fed trade, and we saw that no clearer than we did today. We saw it when the conversation that the president had with Kevin Warsh, and we saw it when he was meeting with Governor Powell. So we'll probably see it again when he meets with current Chair Yellen about the job, although it seems that she's probably not really in the running and more just going through the motions at this point, given her speech from Jackson Hole. But anyway, gold prices right now, we saw basically a big flush lower. And the move is this, is that it's a dollar trade some of the time, and this is one of those times when it was really not a dollar trade. Because this is more of a Fed expectations trade. The dollar, which has been trending lower and has had its moments to the upside, did not save gold when it traded from 1362 down to 1275. And likewise, I think that the dollar, it needs some help on its own. It needs tax reform. It needs healthcare reform. It needs a lot of things. It needs a Fed with a sitting chair that's got longer than 3 or 4 months to go. And I think that those are the things that the market is really looking for. And if you get that dollar stability, then you might start to see it reflect in gold. But right now, the gold is more forward-looking than that. And so as we look at a Fed chair nominee and we look at where this could take us, gold prices are going to remain very unstable, at least as we have continued rising geopolitical risks. We're kind of in a range right now. We went from 1275 to 1362 back to 1275 very quickly, and now we're at 1275 to 1305 very quickly. So gold is going to be very sporadic. It's going to have some big moves when we get moments like we did today, but I would not be quick to jump on board. There is no momentum behind those moves. The big momentum trade is going to come if we trade south of 1275 or if we trade north of 1310. If we get outside of that range, then I think the market is really going to start to pick up momentum and really move. Until then, I think I'm going to err on the side of caution. I'm going to remain long gold. That could be a painful trade from 1295 down to 1275. However, I think if you can dollar cost average is a good way to pick up on the way down. You can pick up more because ultimately I think that the uncertainty of next year will carry into next year, because a Fed that tells you it wants 3 to 4 rate hikes at the beginning of the last 2 years, and you get 1 year of 1 rate hike and 1 year of 2, maybe 3 rate hikes, and then they want to do it again in 2018, doesn't really paint a whole lot of confidence. Right now, gold prices reflecting more about the Fed than I think about the environment. Wait and see what happens when we get a new Fed chair nominee. And don't forget, once we get the nominee, it still has to get through the Senate, and that's another argument all on its own. This has been Todd Colvin coming to you from the floor of the CME Group.